Okay, this video is not financial advice, so pause the video and read the disclaimer. Okay, it's just our opinions and observations on the market based on our experience. In this video, I'm going to talk about measures which I shall be using to reduce the effect of manipulations, okay, which we believe are being done by market makers, like when Trump made about 2 tweets, and of the traders with the most knowledge in the industry, we know that these are not, the tweets of Trump which are causing this, okay, these very big movements on the 1 minute time frame within seconds. We know that it's not his tweets themselves, but the market makers are the ones which do these manipulations at a time where something happens in the world, so that it makes it seem as if it's that event which would have caused it. Okay, so this was a movement which happened close to about 4 p.m. EST yesterday, 26 March, in stock index futures. So one of the measures, okay, I will use obviously is to avoid taking unnecessary risk. Okay, so in a time like this, there's no need for you to be taking highly unnecessary risk. Okay, so you can try to avoid using too much unnecessary risk. And also, if you don't currently have any advantages that you want from trading straight to the actual market of ECN or STP accounts, you can, even if you are really afraid of all black swan events, to even now trade in booking brokers with a good reputation. Although these smaller manipulations like this one which happened yesterday, it's not necessarily a black swan event, because it's just looking as if it's a very big move because it's on the 1 minute time frame. But if I go like even on the 15-minute time frame, okay, you will see that it's not really much of a big candle, especially if I now go up on the 1 hour time frame. So besides reducing risk, okay, another measure I will also use is to trade within premium and discount when trading order-based strategies like turtle soup. So these will now be different from those of momentum-based strategies, like the one on my channel where it's the candle range strategy of predicting bias of daily, weekly, or monthly time frame candles and trading within that same momentum. But if you now trade on order-based strategies, you can trade using concepts of premium and discount. So basically it will be just buying low and selling high, but whilst using your Fibonacci tool to determine which will be the lower regions or higher regions. So usually on the premium and discount concept, what we use, okay, in more of institutional trading is to focus on taking sell trades in the upper half of a Fibonacci tool, and then focus on taking buy trades in the lower half, because usually market makers will want to manipulate price to try and mislead people. So if price would have gone down for some period of time, usually the algorithm in synthetic indices or in financial instruments, both for the algorithm and for institutions, the large institutions, they will now want to do more of their buy trades within lower regions of prices, the discounts. So you see those trades to be more profitable. But now, because of these increased manipulations, you can now even, instead of just taking, okay, sell trades in the upper half to have better performance, you can even trade in a deeper premium or deeper discount. So now you can take, for example, your trades from the 61% retracement to 100. You can even have better performance there. And then obviously I can show you other ways to even improve the performance better in my VIP group with other better concepts there. So for example, since this is the 1 hour time frame, okay, this is a day with those daily demarcations. By pulling the Fibonacci on that previous day, now this current day, which is today, okay, we expect, okay, in our institutional trading, buy trades within that 50% lower to be better after pulling your Fibonacci from the highest high of the previous day to its lowest low, which will be our previous range. Although there are other ways in which you can determine these ranges, I'll show you this later, but don't want to focus on that on this video so it won't be too long. But as I was saying, if I now had pulled the Fibonacci on the opposite side, okay, on your tools, if I had now put it on the opposite side, so the 61% retracement will now be on the lower side when pulling to try and take buy trades, okay, from this almost 62%, which is 61.8% retracement. Taking buy trades within that region will even be stronger confirmations, producing stronger results for your trades. Though this concept does not work well with momentum strategies, although there is another one I use for momentum strategies personally, but using just this simple one, you can use it for the order based strategies like turtle soup. So the way in which the concepts just helps, like I said, if you look before price drove up like that, it was because previously price was coming down. So most traders were trying to follow that momentum, chasing price, and then you can see the manipulation happened as a buy move. So if you are someone who was using the premium and discount concept, which is just basically buying low and selling high, you wouldn't have been taking buy trades after seeing price coming down for a long time like this. You would have obviously be focusing on looking for buy trades as long as your higher time frame trend and also bias, daily bias in this case, would have been indicating for you to take buy trades as well. So it helps now in this way for you to be part of the manipulations in also being trading as how market makers trade, by not being a victim of these manipulations, but you also in a way doing these manipulations yourself. Okay, so a third way I can also use to try and reduce the effect of these manipulations is to trade maybe on slightly higher time frames. So for example, if you are someone scared to still scalp on 1 or 2 or even 5 minute time frames, you can consider now even scalping on 15-minute time frame. And as you go up on higher time frames, these movements might not stop you out if your stop loss is still big. So using bigger stop losses on 15-minute time frame and higher time frames won't affect you. But you see that even if you now take day trades and no longer scalps, if you day trade on the 30-minute time frame or 1 hour time frame, or even trade on higher time frames for those who do short-term trading and swing trading of trades lasting more than a day, you will see that this week probably would have not reached your stop loss. And even if it had reached your stop loss within seconds, you still might not have been affected to the point where you lose way more than your stop loss. It could be maybe just with an extra half or even less of your original stop loss. And remember that for those with very small accounts not able to trade on 15-minute time frame or higher, it's not that these movements where these two manipulations occurred within the past few months only move price within an instant. Like a second, stop loss won't be respected. Your stop loss can still be respected with the movement actually happen within seconds. Okay, it's just that if you are someone who's patient enough, you can then maybe just trade on slightly higher time frames, but you could still trade even scalping on the very small time frames without a problem, because these are not actual black swan events where there are a very rare cases where price could just move in an instant and your stop loss won't be respected. So besides going up on higher time frames, another measure I use to reduce the effect of these manipulations in financial instruments is trading synthetic indices. Okay, so synthetic indices, remember, are not affected now with these fundamentals or black swan events. And remember, for the synthetic indices, currently they are the ones with the performance I have been showing you on my trade histories. Although I am adding back tests for my financial instruments and am continuing to trade them this month onwards. But all these returns I did, even of 83% win rate there on CFDs only, and also of that 75% win rate for past almost 6 months, it's synthetic indices, though the trades are still a small sample, but you can see the win rates are improving as I was adding confirmations over time, as I explained there. And also you can see that it's not really biased, as the number of average trades per month were also reducing as I was adding more confirmations with time. So for those who want notes on how I saw the no, not the financial, but how I saw the synthetic index markets to move, you can just tell me, and then I'll give you the PDF, okay, which a small PDF which I wrote on these synthetic index markets, okay, which explain that of derivative. So I only trade those of derivative because those are the ones which are regulated. Those of World Trade Broker and of Templar FX are not regulated, so the trading won't be safe. So I can then give you this PDF of the studies which I made on them. And for the, even though the regulation is weak, tier 4 level, people are saying you can withdraw about a maximum of 10,000 US dollars from the B booking side of derivative, here where you trade against broker when trading synthetic indices, or even when trading financial instruments in their B booking accounts. But it's overall a broker with better, I mean, with better ratings and even reviews compared to other brokers. On Trustpilot, it has, I think, about 4.4 out of 5. Then for, even if you look at the review made by 55 brokers website, it actually indicates derivative to not be a bad broker, and it offers tier 3 level regulation for their STP trading, where you trade to their liquidity provider in the financial instruments. And then for people in Europe, it actually offers, I think, even tier 1 level regulation. There's safer regulation there. So overall, it's a good broker, although still not perfect. And if you are going to trade the synthetic indices, obviously trading in the BVI FSC account is safer, since it regulates the actual trading, whereas the Venueto account, the standard account, it doesn't. Venueto FSC regulating agency does not regulate the actual trading, but just basic overall operations of a broker. So the commission-based account of the BVI FSC account will have higher trading costs of commissions instead of just spreads, but that's what also makes the trading free lunch in trading. You usually see that the higher the trading costs are usually the less manipulations you will have. So now another thing I will also do to reduce risk of black swan events in trading financial instruments or even these manipulations is also trading options. So I already showed you my trade histories trading binary options, and also if you trade normal options like vanilla options, you also are able to reduce risk of sudden movements in price, because with options you would have already put a certain fixed amount of money for the risk of your trade, and any other losses which okay cannot exceed the amount of money that you would have put at risk. So if you use even that candle range strategy which I gave you, which is on my channel, you can use it for both binary options and also for the vanilla options. So with vanilla options, the difference is just that here the profit will increase as price goes into deeper profits further into your direction that you predicted, but you only win the trade if price will be in a certain direction, okay, with a difference from your open price of trade in the direction you would have predicted. Whereas now with the rise and fall type of options, which is just binary options, it won't matter if price would have moved further in profit, even if it moves in profit just with even just one tick or one single price movement in a second, you can already get the full profit, which may be from around 92% of your original put money you put at risk, or down to as low as about 75% if or 82% when trading financial instruments. Though the payouts for synthetic indices will be higher, probably because with the derivative it's an artificial market which they have the ability to manipulate, although I don't think they will do that until maybe you exceed the amount of money they are okay with you withdrawing, which is probably that 10,000 US dollars I heard people saying. Although even if you are unlucky that maybe they manipulate scalp trades later on, you can just go up to trade only day trades and higher time frames as your account balance increases with time. Obviously it becomes safer for you to trade higher time frames as it's harder for them to manipulate trades of higher time frames. So even when trading normal options now, you can use, if you are in Zimbabwe, okay, where we are restricted with sanctions, you can use AvaTrade. They offer options for financial instruments, actual options, not binary options. And also there's another one, there's also Easy Markets, but the problem with Easy Markets is that their rating on Trustpilot is poor, and also the regulation they offer us is not good. But for AvaTrade, for options, they do offer us, they said they offer tier 1 level regulation for Zimbabweans. But obviously if you are outside of Zimbabwe, you have access even to better you can use for the trading of options, for the actual options which are not binary options. And then for binary options, if you are outside of Zimbabwe, especially in Europe, try to use Dukascopy broker. We just can't use it because we are in a restricted country, but Dukascopy actually offers tier 1 level regulation on their binary options, and they only have them for trading forex currencies. Then for us with derivative, there's no regulation in the binary options, although there is regulation for derivative in the CFDs. So those are the 5 ways I can use to reduce risk for these events. So remember, the first one I said to avoid using too much risk, and then the second one is trading order based strategies, okay, like turtle soup. Okay, in deep premium and discount levels of 61.8% Fibonacci, retracement. Although usually you could have just even traded within just 50% level, either being in the upper half or the lower half. So you can still test those environments. But if you are really wanting to to try and get rid of some of these manipulations on smaller time frames, a deeper premium in discount would be even better. And there are also other measures of different forms of versions of premium and discount we use in our VIP group. So you could see them there if you join my group. Then also besides this, I also said even you can trade even some amounts by trading synthetic indices which aren't affected with fundamentals and world events. And remember, trading in the BVI FSC account, that's the account which will have stronger regulation and more safer trading. Then fourth thing I said is optional is maybe trading higher time frames if you can, for those who are patient enough. Although these movements, these manipulations being done when Trump tweets are not necessarily instant black swan events where price moves in a second. They do take some seconds up to about a minute, so they can still respect your stop loss even when trading on very small time frames. It's just that maybe they may push a bit further beyond your stop loss with a few ticks. So if you are patient enough, you can do that. And then the fifth thing I said you can do is trading options. Okay, which have fixed or limited risk. You will now not even be affected with black swan events in the sense of losing more money than you would have put at risk. So on the options, you can have either binary or normal options. Okay, with Dukascopy broker being best option for binary option brokers for those not in restricted countries. But for those in restricted countries like Zimbabwe, I think Deriv will now be the best option. Then for normal options, obviously you can research on other brokers. But for us in Zimbabwe, restricted country, you can use, if you want to trade vanilla options on synthetic indices, obviously Deriv has them. But for financial instruments, a better option will be AvaTrade. Okay. Then for basics on normal options, not vanilla option, not binary options, but for trading basics on vanilla options and other types of normal options, since they have more complications, you can look for Nifty NB on YouTube. Okay, so Nifty NB does have, oh sorry, it's Nifty BN, not Nifty NB. Okay, he has basics on normal options and legit and good trade history on his YouTube channel. Okay, because besides the vanilla type of options which are more simple when trading normal options, there are other more complicated types of options. Okay, so those option Greeks, you can learn them on this channel. And if you have any other questions on generally how to avoid or try to avoid these manipulations, you can also ask me. But it's not that you can't trade, you just still can trade. It's just that you will be on the safer side if you apply these options which I use